Hey traders, Akil Stokes here of TradingPower.com. Wanted to take a minute to show a trade that I entered today that is, I guess, a great example of not only how to use technical analysis, but really discipline, patience, and confidence as a trader. Now, if you were in the room with me this morning in my live ratio room, we saw this and I talked about it this morning. If not, I'm going to explain exactly what I was looking at. Right now I'm here on Pound New Zealand 4-hour chart. And here's what I was watching. Really not too much pattern-wise I was looking for in here. Thought I may have a cipher pattern. Ended up not getting ratios. But I saw the market spike up here. And what we did was we came right into a structure level. And you can see if I draw my red line in, right around here, you can see we hit this level 1, 2, 3, 4, 5, 6. 6 times in the past, broke down from it, came back up and hit it twice. And we were essentially channeling at that area. And if I go down to my 60-minute chart, you'll see it a little better. Not the clearest channel in the world, but if I draw some lines in, you'll see the market was basically inside this range. And what I did was I told myself, not asked myself, told myself if the market pushes towards the top of this channel one more time, well, I was going to look for a trading opportunity. Why? Because, well, once again, this structure level has proven to hold in the past. And if I can get involved at the very top, what it's going to do is going to give me an outstanding risk-reward ratio. You know, something looking like this. Stops were, let me just see where I have my stops at. I just moved them. Stops were up right around this area, with targets being at a retest of these channel lows right around here. So you can see if I get in at the very top, I'm looking at a risk reward a risk reward ratio looking like 3 to 1. And that's just for target ones. If I drag this down, you can see 1, 2, you can see just about 3 to 1 on this risk reward. The next question I had to ask myself is, okay, I identified the setup. I predicted what I thought was going to happen. Now I need to decide how am I going to enter this trade. And what did I notice? Well, I actually saw an advanced pattern form within this range, and we're looking at a Gartley pattern. If I take my Fibonacci retracement from our swing high here to our swing low, you can see I have my X to A. I'll go ahead and write this in for you. X to A. We come up and hit the 618 retracement for a valid B leg. I then bring in my next Fibonacci retracement from my A to my B to make sure we at least hit the 618 for my C leg. You can see we get it there. I'm going to go delete some of these fibs because it's kind of scrunched up. And if I bring in my 127 extension, again from my A leg to my B leg, swing low to swing high and back down, you're going to see my 127 extension comes in right at 84.28, which should line up right with my 886. Bang, giving me perfect Fibonacci confluence. Let me, if I can zoom in a little bit here for you. Perfect Fibonacci confluence right here at the 127 and the 886. So again, we're looking at a potential Gartley pattern from X to A to B, B to C, and a CD completion up here. And again, it's not a smooth one, but it is a Gartley pattern. And what I did in this scenario is, well, I didn't trade the Gartley pattern, but I used that advanced pattern as a technique to enter the channel trade. And I got involved right at 84.14. As you can see, I'm a good amount up, about 142 pips up right now. Now here's the difficult part. If that wasn't difficult enough, it's you know, once you get used to this, it's pretty simple. It just takes time to master these skills and really train your RAS to see it. Here's the difficult part. My target ones were sitting right down here, right at these structure lows, the close of this candle. Let's go ahead and make this, I don't think aqua's going to show up on this blue chart. Let's go ahead and make this blue. Stops were, or target ones were sitting right down here around 82, 87. And throughout the day, we spiked up, got filled on this candle. And what happened? Well, within the first hour or the first few hours of being involved in this trade, guess what happened? Market spiked all the way down, all the way down. Again, came in at my 84.14 entry, shot all the way down about 100 pips, over 100 pips to 83.07. And we had some news and some releases this morning for the pound, giving me so close to getting filled, about 20 pips away from getting filled on my targets. And then guess what happened? Well, as you can see, market got sucked all the way right back up. So I went from being up about 100 pips to being down about 30 pips, it looks like. And it was a great example to the traders in the room because a few of them were really concerned. You know, and it makes perfect sense. If you've ever been in a trade where you've been up triple-digit pips only to have it sucked back and for a stop loss, well then you know the feeling, and it's not fun. But as a professional trader, I've seen this before. My rules tell me to stay steady, so I kept my stops where they're at. I had confidence that my stops were in a safe position, and if my stop loss was hit, it told me that I was wrong, that my analysis was wrong, and I'm willing to accept that. On the other side, if my analysis is right, my target one should be hit down here. So I dealt with a lot of pain in this market, a lot of pain, spiked all the way up, just shy of getting me stopped out, and then guess what happened? As I closed my chart down, didn't pay attention to it, didn't look at it, we rolled over, and 130 pips later or whatnot, I've got target ones hit. Now I can roll my stops to break even, and the rest of this is a pain-free trade. So, wanted to give you an example of that. Not only a little bit of advanced analysis for you, I guess if you want to call it that, but also just an example of how patience pays off, literally. Again, if price action, when price action spiked up here, if I would have lost my cool, lost my composure, and just said I'm going to get out for break even, or I'm just gonna stop myself out for minus 20 pips because minus 20 is better than a minus 50. Guess what? I would have had a minus 50 pips in my account instead of plus 120. And those are the type of mistakes that, you know, newer traders, struggling traders, those are the type of mistakes you got to avoid. So again, hope you're able to learn something from this video. Ended up being a very nice trade. I'm going to go ahead and end this and figure out what I want to do with target twos. Probably bring some retracements in. I'll worry about that later. But remember, traders, plan your trade, trade your plan, and I'll see you next time.